Politician lies, Bitcoin flies. Well, we came up with that title last night. Bitcoin was still trading around 44,000, but if you guys were paying attention, we've seen a correction down to just above 40,000 before bouncing up back into the 42,000 area. Of course, when we're talking about politician who lies, in this case, it is Elizabeth Warren and her claim that 50% of the nuclear program in North Korea is being funded by Bitcoin and crypto. We'll show you that clip a bit later. Bitcoin was flying and still, in my opinion, is flying relative to everything else. But if you ask Mike McGlone, I'm assuming he's going to tell us it's a leading indicator of what's to come for the markets when we're seeing this correction. You guys know what to expect. It's Macro Monday. I've got Mike McGlone, James Lavish, and Dave Weisberger. Let's go.
Let's go.
What is up, everybody? I'm Scott Melker, also known as the Wolf of All Streets. Before we get started, please subscribe to the channel and hit the like button. Going to go ahead and just bring on Mike and James now. Dave is listening, watching, lurking, and will be here in a couple moments. But as has become tradition, Mike, why don't you tell us what happened on the morning call? Where's Bloomberg stand today?
Well, good morning. Bloomberg Economics, my colleague Anna Wong pointed out that the Fridays, although the number was a surprise, it doesn't really change their recession trajectory. 80% of the gains were for government, healthcare, and which are recession-proof, and the strike resolution. So we'll see what it comes out for the next month. Pointed out the Psalms rule is just like a matter of time to kick in. They think the Fed's going to dot plots that are going to be coming out. I guess we're going to have the minutes. They're going to show 75 basis points of cuts potentially. CPI is likely to be flat. Retail sales will be significant. Right now, expectations are for retail sales to be down 0.1%, which should be a bit of a shocker. And she pointed out it was 2008 when we had those retail sales for the end of 2007 that were signs that, oh, this is a problem. The Fed had already started cutting rates in Sep 2007. So keeping a close eye on the risk for subpar retail sales. Not much. One thing that was kind of striking to me is we had our technical strategists come in and point out how the stock market is. We all know it's number go up. Everything is going up. Everything is great. Everything's bullish. Exact opposite of this time last year, and exact opposite of what I'm seeing in commodities. So I'll tilt over to what I pointed out and showed in the meeting is commodities are showing a completely global trend towards recession. I mean, we have energy down about 20% year, the energy sector. We have industrial metals down about 20%. We have grains down about 20%. The only key thing that's up is gold, about 10%. Yeah, that's giving back some gains. But that is the global space. And there's two headlines that really struck me that I wanted to bring out just in this morning's reading. I obviously read a lot during the weekend, but I tried to. This morning, two headlines were Saudi chemical giant sees weak global demand extending into 2024. That was a headline on Bloomberg this morning. I'm like, okay, well, that makes sense why OPEC's been able to cut supply because their customers aren't really demanding a lot. I mean, remember, they might piss off their customers if they cut supply too much and prices go up. That's China and Europe. And then another key headline was from our Bloomberg intelligence group that global economy is set for 2.7% growth in 24, down from 3.1%. And that's a lesson I learned in trading treasuries. It's the trend in demand estimate revisions, and they're still down. 2.7% growth would be the worst since the financial crisis. And when is the next time we can expect demand estimate revisions for global growth to pick up? Commodities are showing that big problem. The key big dichotomy on a global basis is this resilient U.S. economy and the resilient U.S. stock market, which would be wonderful if it keeps going. What you're seeing in Bitcoin this morning is showing the lessons that you kind of hinted at. As I still think Bitcoin is the number one leading indicator for risk assets. And this year it was like last year was down about the most, and this year it's up about the most. And obviously we're getting that little tilt downward, which is completely expected. You know, it was just kind of way overdone. Now we know 30 is a great floor support level, but I look at this as it's just kind of this, we're at the point now we're kind of going to be sliding in, just gliding into the end of the year, and a lot of things you see in the screens might not matter. except for me, from a commodity standpoint, I see nothing but a global tilt towards recession. And I'll end with this. It was only a few months ago, most central banks on the planet were still hiking rates, and the effects of those, just normal lessons of history and economics and cycles, is those effects are not even are far from being felt yet. And markets already priced for a lot of ease next year.
We have ECB and BOE this week, I believe, right? Bank of England and the European Central Bank. So a lot of people, I think, watching those to see if that'll give us a preview of what might happen, down the road for the United States. This is in Bloomberg today. Rate cut pivot can't come soon enough for debt-strapped companies and governments. If you actually read into this, there's a lot of people who not only want this pivot to happen, but need it to happen, right, James?
Oh yeah, I mean we are, just like Mike said, we're not seeing the lagging effects yet of just the sheer velocity of rate raises that we've seen over over that 18 months. So one of the things that I pointed out this weekend that I'm surprised more people weren't talking about and should be talking about is the fact that we've got 3 big bond auctions coming up the beginning of this week. And really, most importantly, you've got that 30-year bond auction on Tuesday, which is a few $billion smaller than the last auction. Pretty interesting that the Treasury decided to float fewer 30 years after the last one was just abysmal. So I think a lot of eyes are going to be on this, but I do expect the Treasury is kind of positioning itself for success in this auction, because if it doesn't have success, that's a severe red flag. That's a really big red flag for us. They've been issuing more and more T-bills on the short end of the curve because they're able to use that money market, the money market funds that are sitting in the reverse repo, and they're just drawing that out. And when that's gone, they're going to have to go further out on the curve unless they just continue with this band-aid of short-term treasuries. But the problem, if they do that, is that they signal that there's not demand on the long run of the curve, and there's not demand for U.S. treasuries as an asset, and that's a major problem. So I'm watching that Tuesday auction pretty closely to see what happens. I expect it's going to be okay. I expect, because they're issuing, I believe it's $3 billion less than the last auction, and they've probably had some solid discussions with dealers. I think that they're the when issued market is not going to be trading quite as optimistically as it was last time. You already see yields ticking up here. They're up a percent this morning, and I mean, again, 1% in a 10-year treasury is a lot. So that's quite a bit of a move for one day. And so I believe that the street is aware. They're wary of the auctions. They're keeping an eye on them. And so while everybody in equity land is waiting for the Fed, I think they ought to have one eye on these auctions as well.
Right. But this idea, obviously, from this article as well, was that these companies really need these rates to come down or they're going out of business. And it's kind of like what we saw with Silicon Valley Bank and all of the bank collapses where they were just too skewed towards the long end. And
right. But it's kind of interesting. Yeah, it's interesting. So we've got rates. The rates came all the way in off the soft landing narrative has just been, it's been so broad, and we just keep hearing it over and over. Half the articles I read the few minutes after I got up, and between the few minutes I got up in the show, half the articles, because it's only 6 a.m. here, half the articles I read were about how the Fed is achieving this. They're winning. They're going to have the soft landing, and you've got strategists who are calling for the S&P all-time highs next year and in 2024, and then you've got the other half, which are like, we're going to have a recession, but it's not going to cut deep. So nobody expects that we have any event. It seems to me, it's clearly not it's not the overwhelming majority. It's a very small minority that believes that we could have some sort of event that knocks us off kilter completely. I don't know what that would be. That's why they call them black swans. But the fact that nobody expects it at all, everybody expects either a soft landing or a really shallow recession, that gives me concern as an investor who's been doing this for a long time. When the entire street is looking in one direction, you should be aware.
I got to piggyback on that one a little bit, James. I think it's the concept of people expecting black swans. I remember that book came out. I remember a good friend of mine was reading it in 2009. I'm like, the insurance policy is already over. That trade already happened. And the key thing I'm worried about was a gray swan, and that is just what you described. This is a almost complete juxtaposition of this time last year. I mean, recession, and it was assumed, accepted everywhere, and we didn't get it. Yet we've had this massive rally in all risk assets, and now that we're all expecting it's okay, the Fed's going to ease, it's a soft landing. You and I both know as traders or risk managers, the probability of success next year is a little bit of the counter trend to the acceptant. What people generally accept is, Benjamin Disraeli said, typically doesn't happen, is the trade for next year is just a little bit of reversion in all risk assets. So you mentioned the bond auction. I'm a bond guy at heart. I started in bond trading,
Right.
and I mean, to me, the number in trade I always love was trading zeros. I mean, long as possible. You can get a lot of pain in zero coupon bonds, 30-year zeros. So one thing I like to point out is my colleague Ira Joy pointed out, as you mentioned, the 30-year, it's a reopening, and they typically go well. So I think that's the consensus. And I think you also seen the tilt towards the government and the treasuries realize, okay, if there's the most significant asset in this planet that really matters, is the U.S. needs to manage that 30-year. It's the benchmark and do it well. So I think, and also a key thing I'm enjoying is the way human nature and psychologies and cycles work is the market's just assuming, because rates are going down from the highest levels in 40 years and yields are going down, that's great for the stock market. But I think they're missing, well, what did you expect as we tilt towards a recession? Yes, rates and yields have to go down. The question is what stops that downward trajectory. And typically it's the things that used to be the case, the Fed would ease, but why should they? I mean, this is what's changed in our entire career. We've never seen that pump up in let's say in inflation and from massive liquidity, and we're still seeing the after effects. We're still in that hangover, yet the market's expecting the Fed and central banks to do what they always have. Just throw the liquidity at the market, yet they've learned that lesson of throwing liquidity at markets and inflation. So to me, that's the fight the market hasn't figured out yet, and I think Bitcoin will be the first one to figure out, okay, well, we might not be getting that massive liquidity that we're used to. And I bet Dave is ready to fire up on something.
And I want to, before I let Dave fire off, I want to bring something up, because we talk about Bitcoin being a leading indicator. I personally think in this case, the evidence shows that once again, we had a massive ramp up in open interest, and someone took an opportunity to flush that out and make a whole ton of money. We have roughly $400 million in total liquidations. We were talking about these last week, if you guys recall, and it was very even short long, even as price was going up, which I found astounding that longs could be getting liquidated in this environment. But this time you're looking at 86% was longs that got flushed. Like, for any big trader who understands Bitcoin, there was a huge opportunity to just sell this off and cascade liquidations and make a ton of money. I mean, Dave, does that align with what you think probably happened on this move?
Well, it is what happened. It's very clear that it's what happened. I was actually right now furiously typing, looking at last night, and the perpetual swaps were printing well below spot. And so you can kind of see it, and spot kind of looks like it led it. So I'll go through and do the diagnostics later and post about it. But, look, at the end of the day, if you look at what happened and you look at it, the mechanism of why it happened it's almost always the same every time. There's a possibility to start a cascade, and people start a cascade. And from 29,000 to 26,000, which was the one that happened last summer, in percentage terms is double what happened last night, which is interesting. It means that it was nowhere near as profitable as it usually is. But the numbers from a technician point of view, and when you have your chart guys on later in the week, you'll see it. The number is almost textbook. So we had this rally when I won the bet last week, when it pushed through 40 all the way to 44, which is a crazy size rally. And what have we gotten? A 50% retracement. I mean, literally textbook. Where did it bounce? Right below the 50% retracement level. Where is it kind of holding? Kind of right there. So, It's not terribly surprising. I mean, Bitcoin is an option. I've talked about it a million times. Expect its volatility to be higher, not because it's a risk asset per se. It's a risky asset per se, and that's where Mike and I differ. We've talked about this a bazillion times on the show. I don't want to go over old stuff, but I also want to point out something else. And I loved your. I actually copied it in our recap. Your no, Dikembe Mutombo moment to what happened to gold and silver last week is exactly what happened to Bitcoin. So Mike's talking about Bitcoin as leading indicator. Sounds good on TV if you're doing a soundbite, but as soon as you look at it, you realize it actually suffered exactly the same sort of rejection, at its level as gold did. So I don't know that there's a whole lot to read into it. I think that the fact is, we've seen, you get these flushes, you get open interest. Now, the truth of the matter is there wasn't that much, there was very little euphoria at 44. This wasn't a $1 billion liquidation kind of event. Moreover, my guess is there was more demand on the exchanges where they wanted to push the price down than they would have normally expected. That didn't mean they didn't make money doing it, but it is important to put everything in perspective. I mean, the price of Bitcoin has basically doubled, since it's not quite doubled, it's up 50% from where it was last time. If you go back and you look at liquidations we saw in the summer event were much larger than they are today. And so as a percentage of its market cap, it's just not that big. And it's kind of crazy, but $350 million is non-trivial, obviously, but it's really not that large. So
no, I mean, in the FTX days, we'd see $1 billion, right?
Yeah,
I mean,
right.
It's
So
a big difference.
You're looking at this and you say, okay, well, the big buyers in America aren't awake when this happened. I mean, they were actually awake. It's Sunday night. People are watching football or doing whatever the hell they're doing. They're Cowboy and Eagle fans. But the reality is, yeah, I mean, it's like it's always these like dawn raids at varying times that this stuff happens. And no news, and look, you called it, Scott. You literally within minutes of you posting your tweet about the
When
weekly
correction.
candle, wham, and it was no. I'm gonna start calling you Dikembe.
Lucky timing. Yeah,
But
I mean,
I
eight
just
straight
think trying to
green
read
weeks.
stuff into that is tough. I mean, look, there was some euphoria in some of the altcoin markets, and some of those got plastered. And I'm sure you're gonna have a great time unlocking that this week. But look, I think that if it were done in a normal way and we weren't dealing with this sort of, gap volatility to the downside, which of course is like asking, whatever, it's one of those things that is the way the market works until the market structure changes. The fact is I don't think it changes a whole lot in what's going on. Now, that said, both, James and Mike said a few things that were interesting. The bond auction, almost certainly they are being smarter. They realized last time they didn't really do a great job of checking in and doing their normal masterclass of manipulation. So expect class to be in, and the auction will go off, reasonably, because they've done their homework. Last time they didn't, and it's like it basically proves to them that if they're not, putting their thumb on the scales, they got a big problem. And we kind of know that, and that goes along with what Mike was saying. The other thing Mike was talking about was retail sales. And look, the American consumer has been an engine, but a large part of that engine, the cylinders are all glunked up because you can't take money out of your houses when mortgage rates are like this. Your 401ks are literally the only things that people are having to sell. But based on what's gone on in the market, there hasn't been a whole lot of selling yet. And so it's one of those things that, I come back to the G.I. Joe with the Kung Fu grip line, right? You kind of think that we should have the opposite of a Santa Claus rally this year, at least in the stock market, for people to pay for whatever they're spending in December, because it's literally the only place they can go.
And they can borrow from it without selling. So, which just piles a little bit more debt on top of all that debt. So,
right. So,
and remember, everybody has to recognize the fact that Bitcoin, yes, it has been the leading risk asset. It's been the tip of the spear for years here, but in the last number of months, it has diverged from that because it has significant underlying fundamental value change that's going on with the probability of a spot Bitcoin ETF. And so as people realize that this is coming mainstream, it's absolutely giving a fundamental lift to the price of Bitcoin. And so I believe that it's going to remain. I don't believe we're going back down to 16, 18,000. I don't see it. Of course, it's Bitcoin. I could be completely wrong, but Scott,
What can I say?
please be wrong.
The
Yeah.
pain.
So yeah, and so that's that. But that is a significant development in Bitcoin that we have to recognize. And as we get closer to that next date, do you guys know when it is? It's in January. It's that the next drop date for the SEC. You know,
8th.
it's the 8th. Okay, I was thinking 9th for some reason. So
ETF,
okay,
yeah.
Man, maybe it might have been close.
So that is on, but that is giving that's fundamentally changing the way that this is trading. And so, like Dave said, what happened last night was, it's a washout of leveraged trades. You know, that it's a story I've seen all the way through since I've been watching it. It's a foolish trade in my opinion. So.
As old as time, right? Yeah.
I got a question for the three of you. There's something that's been bothering me for a while, and I learned the lesson the hard way. Is we've had a enduring U.S. stock market rally for over a decade, and what it's done, it's pumped up U.S. stock prices versus the rest of the world, versus housing, versus everything, the highest prices ever, versus GDP, highest prices since 1930s. And the one thing I've learned is until that ends, for your average retail or investor, or money manager or wealth manager who has access to a good Bitcoin ETF within the next month or two, until that, what's been making them money and making them look good and their clients do great, until that ends, I see little reason to stop doing that. And it's a lesson I learned in marketing. I used to ran commodity indices, and I remember learning this at conferences. All these wealth managers told me, well, why would I invest in a commodity index that tracks futures when I can invest in equities that go up more anyhow, or energy equities? So to me, that's the question for the group is, there's so much, how many ETFs are going to be launched? I mean, a dozen or so and Bitcoin, and I mean, that's kind of extreme. We're going to be telling the story of history, like, the market got too enthusiastic about something that expects to change. And I know what Dave's going to answer, but the key question is, you got to get people who've made great money and with their clients for over a decade, just being in the stock market, to tilt over to this thing called Bitcoin. To me, that's the key thing I'm worried about, is until we get the stock market, at some point it's going to have a bear market. We have to. Obviously, it's not. One way I measured is the S&P 500 has not been below its 60-month moving average on a closing basis since 2011. Okay, well, that's pretty darn long bull market.
Yeah, but we see winners and losers in ETFs all the time. ETFs are not cheap to start. They cost hundreds of thousands of dollars just to get them listed and going, so not anybody can just go out there and list one and manage one. But I believe, Mike, I believe that the reason that Fidelity and BlackRock in particular are launching these is because of the demand that they're already hearing demand from their clients. And so that's a key indicator for me, is that they wouldn't do this unless the demand was there. Like, the market is ready for it. Now, is it ready for 12 ETFs? Likely not. It will consolidate down to 3 or 4. There will be the BlackRock, there will be the Fidelity, there's going to be GBTC, in my opinion, and then there's going to be one that rises and takes hold, that is one that people are willing to hold in their 401ks, who are Bitcoin maximalists that don't want their money at Fidelity and BlackRock. So there's going to be a number of them, and we all know this as risk managers. If you're going to hold gold in an ETF in your IRA, you probably, if it's a long-term holding, you should probably hold a few of those ETFs, not just one, because you don't want single name risk in anything, even in a commodity ETF, in my opinion, again. So, but that, I do believe that there's room for a few of them. 12, that's a lot. We don't have 12. We don't have. I mean, are there 12 really heavily traded gold ETFs? I don't
No.
think so. There's a handful, 3 or 4 that really take all the market share. So
GLD.
Yeah, but that to me is the most bullish case for the ETF, is because all 12 will be trying at once if they get approved. The marketing campaign in that battle for AUM is going to absolutely blow minds, I think. And it's just going to be sort of a de facto marketing campaign for Bitcoin. At least that's my sort of wet dream surrounding this in the short term. They get
been
approved.
impressive.
We see them everywhere, every subway, every TV, everywhere. Man, I was watching some football yesterday or basketball the other day, and every commercial was Coinbase. Coinbase is running commercials like mad right now. So, I mean, we're getting the marketing now again.
I'm just seeing the same thing in GBTC. I just look up, I see it in CNN, and then I've been in, I think, a dozen airports in the last 6 months. I would say at least half of them, I saw GBTC on the screens.
Really interesting.
Yeah, he's mentioned that before. Yeah, I do want to circle to the topic. Well, 2 things. Dave, you kind of mentioned.
I just want to say one thing.
Yeah.
I think the ETF in Bitcoin, to compare as it refers to, as it's based on whatever U.S. retail investors, is Netscape's IPO. And those of us who are old enough to remember Netscape's IPO in '96, the internet bubble didn't happen in '96. The internet bubble really accelerated in '98 through 2000. Yes, timescales are compressed these days, but it is the first product that a mainstream investor who has a brokerage account, who doesn't want to, who it won't be, how do I do this crypto thing? What place do I go? I've heard these people aren't real. They're not regulated, etc. First time you can do it. It is literally the same thing. The Netscape IPO rang the bell. It took a while. There were ups and downs. Things were extremely volatile. We had irrational exuberance back then. We've had all sorts of stuff. At some point, however, it is the introduction of this stuff to the mainstream. And that is why, by the way, it has taken this long, because the people who don't like it and realize they don't really have much of a choice anymore have been fighting it. And they're still trying to fight all the other stuff, because where the real mania will be not in all those Cisco and the other internet stocks that other stocks, AOL, Netscape, all those things went crazy. What really went crazy in the internet bubble were all the small cap crap, most of which ended up being flushed out, but some of which ended up being winners. And obviously the ones that were big were, Amazon, et cetera. We know the horsemen now. But my point on this is that the reason for all this stuff, and we saw it based on the story, this is your perfect segue, Scott. The reason Elizabeth Warren and Jamie Dimon are saying such complete bloviating nonsense, provably wrong crap, in front of the Senate, is because while they may accept Bitcoin and they don't love it, but they understand it, what they really want to do is stop that excitement in the technology that will fund the real next generation of disruption. And that's really the issue here. So we could talk about what all this stuff means, but at the end of the day, remember that the reason why the Bitcoin ETF matters is because it's the first mainstream product that is going to get marketed by mainstream people. And then people who become crypto curious, they get Bitcoin, then they start looking at other stuff. And so we all know how this story goes. I think that's a very important point. It's also an important point that it took years, from the event that I did for it to go in. So this is not a snap your fingers and jam. And if there is a global recession, there's a global recession, right? So it is worth understanding that.
I like the analogy. I would have mentally maybe compared the Netscape IPO to Coinbase when they came on, because it isn't necessarily an ETF. It was the single largest company basically going public and the biggest name that introduced it publicly. So, and we've seen what happened with Coinbase, right? Absolutely slaughter. And now this massive bounce and the volatility that you talk about. And I actually think that Coinbase will be a huge winner if the ETF is approved, just because obviously their name is on everything. They're partnered with BlackRock, the surveillance sharing agreements, all of that. But you did hearken Elizabeth Warren, and so now she cometh. The devil from Satan, from hell herself, will now grace us with her presence. I want to show you some of that bloviating that you mentioned right here, because it does say politician lies, Bitcoin flies.
Threat out there. It's crypto, and it is being used for terrorist financing. It is being used for drug trafficking.
Totally.
North Korea is using it to pay for about half of its nuclear weapons program. We can't allow that to continue.
I would agree with her if it was true.
Yeah, I mean,
Well,
could I just? I mean, I tweeted this stuff out. It was my most.
I stole the
engaged tweet
title
ever.
from your stream, anyways, Dave. So you get first crack at her. So, yeah,
So
go
look,
ahead.
Hamas. So let's talk terrorists. Hamas told their donors last April to stop using Bitcoin. Full stop.
We know that.
Yeah, there's probably some stablecoin stuff that's going on, but it is a fraction, a tiny fraction of what traditional banking is using, and a tiny fraction of what those money changers all throughout the Arab world are doing. And that is through a function that's basically cash and debit cards and other sort of stuff. I mean, it's fractional. More importantly, though, point two, you talk about drug traffickers. Only moron drug traffickers, only dumb ones do it, because at this point, the FBI is catching the drug traffickers that use Bitcoin far easier than they're catching the ones that use pallets of cash. And the FBI will tell you so. I've heard it from FBI directors 3 times at 3 different conferences. It is very clear. There is a reason they don't have anyone from the FBI testifying at these committees. Why? Or the DEA, because they would have to contradict or lie. And, kind of officers of the law, they may lie, but it's probably not a really good career move to have it proven. So that they stay away from it. Now, the third one is the most interesting one, though, right? That's the North Korean, military, North Korean one. And here I want to make 2 points. Point number one is it is completely unproven. Sure, the Lazarus Group is one of the largest cybercrime, committers in the world. That's not just crypto, that's just cybercrime. And some crypto is vulnerable to cybercrime. Yes, that is true. And so when you lock up these numbers and you look at them, it's like, okay, money is fungible, but is it really that? I mean, it's cybercrime. But the most important point is, why is crypto and these projects, why are they easier to hack? Well, they're easier to hack because of Elizabeth Warren, because she has blocked with her iron fist on the SEC any reasonable regulatory regime in the United States, of which being, cybercrime and disclosures, all the stuff that happens would be stronger. Now, would they still be able to hack? Yeah, probably. Would it make a material dent in their ability to hack these fly-by-night things? Well, sure. If people had a more regulated, a more robust industry-sponsored, way to get into crypto, there probably would be more of that. But that doesn't happen. And that's the problem with regulation by enforcement. So literally, you can trace part of what she's saying right back to her own doorstep. And I find that reprehensible that nobody points that out. Now, obviously, people like the fact when I pointed it out, but it's very clear. Regulation by enforcement pushes stuff offshore. A lot of the offshore stuff is completely unregulated, and therefore, and people are incentivized to make bets. And let me be clear, I am not saying regulation's a panacea. But if you're a business owner and you have a choice where there is nobody who's going to make it an existential problem, and you have a choice of betting on black, and if you win, you make piles of money, and if you lose, well, not your money anyway, you don't really care. That's something we used to call the trader's option on Wall Street. And everyone on Wall Street knows this, that you don't want to give any trader a payout based on their profits without risk managing what they do. Well, now take that to an entire industry, and you have companies out there who say, well, you know what? I don't want to name them because there's lots of them that we know. Companies that basically short shrifted information security, who didn't care so much about paying for it. Why? Well, because there's no real risk to them. They lose maybe their business doesn't work, but they're betting on black. And if they're right, they make hundreds of millions of dollars. And if they're wrong, okay, they pack up their tent and they go to the next store and they try it again. Obviously, thankfully, Do Kwon's being brought back to the US. Maybe he won't be able to do it again, but there are lots of other people who did that on the InfoSec side. Having regulation by enforcement makes that easier. Easier for the hackers, that is. And I think that's a very important point. Okay, my rant's over today. Sorry,
Mike.
I got a really quick one. And since the lessons of history is bad guys oftentimes adopt revolutionary technologies to and it's just an example of how revolutionary this technology is. And so I like to say Elizabeth Warren might be right, but doesn't mean we're supposed to eliminate guns because they kill people. I mean, that's bad. It's how it's properly regulated, and you can't eliminate guns because they kill people, or knives. But this technology is revolution. I got that sense being in Asia, in Hong Kong 5 years ago. It's like, Mike, we can get dollars and access to something that's not a non-melting currency for the first time in history, on something we can get for $12. This is something that's unstoppable. But so let's take Elizabeth Warren is a great antagonist, her and some of her colleagues, because they're not friendly, they're not nice, and they're not attractive. So thank you. I mean, it's like perfect. We can write the history books about this. So I love when they beat up on things like, but the technology is, you read all the history of how bad television was going to be, and how bad railroads, because they went too fast, and electricity, and even the internet. We remember that. Oh, it's not going to, it's just silly stuff. But to me, this is just indicative of how revolutionary this technology is. And we had 20,000 wannabes, and we're getting down to 10 that really matter.
Yeah, it's interesting because Elizabeth, she always claims she's fighting for the small person, and she wants regulation in order to protect people, the little guy. But then suddenly she's squarely aligned with the big banks here. It almost seems like she's protecting them. And if you just look at first principles, like what is Bitcoin to Jamie Dimon is just a tremendously disruptive technology that impacts his business negatively. And so it almost feels like, and I don't know, I don't have any information, but it just feels like she is squarely aligned to protect them and for political interests. And that it seems obvious to me, but that's me and my little my little house off on the prairie watching this from afar. And DC is just there are agreements inside DC that we're just not privy to, and this just seems like one of them.
DC is going to change soon. I mean, I think we all know that Elizabeth Warren is a liar. We probably don't have to spend too much time on it. Dave, I do want to say one thing that you kind of mentioned earlier, which was the altcoin market. I also found this interesting, just anecdotally, when we saw this big flush. We did see a pretty reasonable move in altcoins down. They bounced pretty fast, but a couple of them, which we never see if we're truly flipping, going bearish, a couple, you can see these were liquidated shorts. Like I just was looking at the ones that perform well. I mean, Injective, this is one of the better performers this year, currently at 23. The all-time high is 25, right? If you're flipping into a bear market, you usually don't see coins go from $1 to 23 in a year. AVAX, this entire ecosystem didn't care about any of this drop. Continuing up, I just think it's very interesting and kind of supports the idea that nothing really changed here, that there's a lot of these altcoins that literally don't care what Bitcoin does right now. And if you're really in one of these moments when the market is rotating and things are about to correct massively, you generally don't see anything performing or outperforming.
I mean, look, it actually looks from, that Ether, as a proportion, liquidations. I mean, I was just looking at the 24-hour liquidations. I mean, Bitcoin around $90 million and Ether at $70-some-odd million.
Yeah.
Given their proximity and market cap, it looks like this was more broad-based. I mean, broad-based. Remember, this is all within like in minutes, right?
Yeah.
This was one of those one candle. No, I mean minutes. I mean literally. Yeah. A big flush, and it looked like it was an attack, which is different than normal. I mean, normally it's Bitcoin leading it down on this because it's easier to do it there, or Ether. This one looks like Bitcoin and Ether, and everything else just kind of followed, as opposed to it being a broad-based thing. So it's kind of fascinating. I mean, it makes sense in a way because Ether had such a strong bounce off of, I mean, the Bitcoin Ether, ratio bounced strong off of 0.05 back up. It was at 0.055 for long, and then it went all the way down, almost in a very monotonic chart, down to 0.05, and then bounced back to 0.054. It's now 0.053. So Ether was hit a bit harder. But it is interesting when you look at that sort of stuff, right? Because it's telling you something, and it's telling you that, this was less profitable for momentum ignition, manipulation stuff, but it is what it is. I mean, and the only reason it's less profitable is people doing it aren't incredibly dumb. I mean, I keep explaining this to people. The way you do this strategy is you build up, long spot, short perpetuals. There's 3 times or 5 times the liquidity in the perpetual. And then what you do is you start selling this and hope to buy this cheaper. But if this doesn't go down as much as you expect, and this bounces, then you could get hurt. Well, it didn't bounce, but it didn't go down as much as they expect. So they made a lot less money than they might have otherwise made. It's the kind of thing that, look, were there a global regulator, they would say if you did this intentionally, you'd be doing a perp walk. Well, jail, no. I mean, it'd be more like, it would just be a fine. Look, this strategy was built, I hate to say it, by my old company Citigroup in 2 decades ago, and the nickname for the strategy was Dr. Evil. Literally, that's how come they got caught, because they did it in sovereign debt versus sovereign debt futures. Sovereign debt being less liquid than the sovereign debt futures market, so they got long sovereign debt, they got short futures, and they said one day, okay, look out below. Bam, started selling sovereign debt across the board, didn't touch the futures and put their bids in lower and made money. Now, when they started investigating this, the only reason they got caught is because the code for this strategy, and it was done programmatically, was literally labeled Dr. Evil. That's what they called it. And they had the email to prove it. And so they got fined at the time. I mean, back then our time scale and our things were different. It was like a $20 million fine or something, which now that sounds cute. Kevin, we've just seen multiple.
Now it's 4 billion, casual 4 billion.
I mean, for Citigroup, it's like, who cares? I mean, I hate to say it, but it's a time-honored strategy that most people don't want to see happening, and I think most people in the Bitcoin market would love to see that go away as well. But it is what it is. It doesn't matter. At the end of the day, it tells you where the real buying interest is versus speculators. The real buying interest in this particular case was at 42, not at 44. Eventually, over time, it might ratchet up, but it tells you something. And so, we're kind of where it should be right now in the state. That's really kind of the point. And what happens from here on in? I mean, look, my forecast, when I made it, I said I thought we would bounce between 42 and 46 until January. That's what I thought. Yeah. And maybe I'll be wrong. Maybe it will break 42. Maybe it'll go back below 40. Who the hell knows? I mean, look, there's always black swans and things that can happen. But it is important to put everything in context.
I want to ask you guys another question that we're probably woefully underprepared for, but we've obviously been tracking what's been happening in Argentina with the election of Milei, who is, kind of pitched as a pro-Bitcoin presidential candidate. As we know, he won. He was more pro-dollarization and not anti-Bitcoin, I would almost say, if we're being more genuine about it. But he's making quite a bit of waves. And I guess what we have here, new president tells Argentina shock treatment looms. He basically is one of the first candidates I can remember in a major country that literally ran on a platform of austerity and won, right? I mean, he's literally saying this is going to be extremely painful. There's no money. We're going to slash everything. You guys are going to feel it. And everybody was up for it. That's how bad it was in Argentina. Could that, maybe James, could that get so bad in other places that people, because this in the United States, you would think that a guy like this would literally be laughed out the door, wouldn't even get 1% of the vote. Right? Saying you're all going to feel the pain. What we see in this country is the dead opposite. You just say, listen, cut tax, whatever we need to do to stimulate.
You mean, could we?
I don't think we have a candidate like this, but how bad must it be in a place like
we
Argentina?
Actually do, but I'll let James go first.
Right.
Yeah, no, it's a really good question. And, let me just see if I can bring this up so we can show exactly, it's no surprise why this happens. I mean, this is the value of their money against the US dollar. I mean, this is why these things happen. If you're in Lebanon, you're in Venezuela, you're in Argentina, you cannot store, we've seen the stories from Lynn Alden about Egypt. You cannot store your money you can't store it's not even money, the what you've created at work. You can't store that in the local currency, and that's why these these candidates are driving to the top of the heap, because the distrust of their central bankers And they want somebody who will clear that out, even if it means short-term pain. That it's that bad. And so the point is, can that happen here in the United States? We're nowhere near this. I mean, with all the hyperbole that we hear in the United States about how bad inflation is, inflation is painful. It is. Like, I do not want to belittle that. Quality of life is going down for many people in the United States, but not like this. Like, this is criminal, to do this to your people, where you will work every day, and every single dollar you have, if you don't own assets, you're wiped out. You lose virtually everything you have every year.
But for all of his bluster here, I don't know if you guys saw, but the first thing he did, remember, he ran on the premise of eliminating the central bank entirely and de-dollarizing. First thing he did was basically reverse on all of that, hire Luis Caputo, who was the head of the central bank under Macri, to run to be the economy minister. So I think he signaled to the rest of the world, I ran on a crazy platform, but I'm probably going to actually, to some degree, get in line.
Yeah, I mean, well, how can you not get in line? The system is so powerful. It's extraordinarily powerful. So unless you have, and so, but this is how dictators are born, right? So,
well, but look at what he actually did, guys. I mean, first day, 21 government departments down to 9. It's like the first thing you do. It's like, you basically have to cut spending on stupid shit and reinvigorate the economy. I mean, we're so trained now. It's like I hate the soundbite economy, right? We're so trained to say, oh, it has to be immediate, but things do take some time. I mean, Thatcher in Britain, was it 40 years ago? Came in, and basically it took time, but it made a big difference. It was cutting government crap in order to reinvigorate private industry. That's really what he's doing. Everything else he's doing, there's basically a 3-pronged plan, and the third prong is what we would focus on, right? The first one is get government out of the way of private industry. Second is reestablish some form of soundness to the money, but you can't do that all at once when you don't have any. So, you do that second. And then the third is to get a little bit more radical with regard to that, and probably make money absolutely sound. But you can't go from here. It's like crossing the Grand Canyon, right? You got to kind of go down and kind of, whatever. I mean, you don't just build a bridge over it immediately. So, expecting in his first day for him to have dollarized and done what he could do. I mean, it's like,
it's not even building a bridge. It'd be more like hitting a reset button.
Yeah, that's really what he's looking to do. If you think the reason he hired that guy, and I don't have to, I could be wrong. I have no notion, but the obvious smart move is to try to make the restructuring of debt more orderly. And who best to do that but the person who knows all the goddamn creditors, right? So it's like, the answer is, we're going to get rid of what you used to do for a living. It's going to take time. I need somebody to help me get the creditors in. Do you want to be part of the solution, or just go down in history as part of the problem? And that's probably how he presented it.
That's fair. Yeah.
And my guess is that if someone's sitting there saying, you know what, this is better. I mean, I understand this. So I don't think I think you got to be a little bit more patient than that. I mean, the fact is, we do have a candidate that's actually calling for what Milei does.
I mean, I would have been very surprised if he nuked the central bank on day one, to be fair.
Right. So we do have a candidate like this. This is more what Milei did on day one is literally plank one of Vivek's platform. Yep. Now, Vivek has done himself a disservice in the debates and in some of the stuff that he's done vis-a-vis, offending people's sensibilities. Is also young and people don't trust him, yada, yada, yada. But his ideas are the right ideas. It may just be 1 or 2 cycles too soon for it. But this is literally what he's calling for, is getting rid of bullshit government agencies, eliminating red tape to reinvigorate the economy. And so it is worth interest. It's a very interesting experiment. Right.
Yeah,
it is the right thing to do.
Go ahead, Mike.
I I got to point out two key things on this from a macro standpoint. First of all, those of us remember Walter Mondale. I will increase your taxes, and I won't be elected. We remember him. He became, I think, an Illinois Supreme Court justice, but we kind of liked him in Illinois when I was living there. But so that's very unlikely. But that is one of my key fears. At some point, we're all going to get to a point where we're going to be a candidate and say, you know what, this silly, stupid, we can't just spend to oblivion. We'll stop the change. The key thing I like to point out is it's probably not the time in this country, and you guys covered it well, but one thing I want to point out is this massive shift of the last 20 years of trends towards China against South America. And I'll use one key metric, currency value. If you look at the 1 year change in the Mexican peso versus the US dollar, it's up 12%. You look at the 1 year change in the Brazilian real, two largest countries in South America versus US dollar, it's up 8%. You look at the 1 year change this year, just to change this year, and the Chinese yuan versus the US dollar, it's down almost 4%. My point is, this is a major shift in a global macroeconomic sense that's way positive for the U.S. Favorable, bullish, up-and-coming economies on the south border, like Canada and the northern. That's a whole continent that's unstoppable, and all of it's part of China pushing back on cryptos, but China reaching that extreme of communism and socialism that's always failed. And that, to me, is just getting started.
I didn't know if any of you guys wanted to jump in on that. I just find it very curious that it can get so bad that austerity becomes effectively a reasonable platform to run on, and shows you just how bad it can be. Mike, I want to ask you about oil. It's fallen off a cliff.
Yeah, well,
because we were talking about it at 96. You said this thing's going to go way down, and everyone kind of said you were nuts. I saw it.
Well, that's what you have to have. Sometimes, when everybody agrees with you, you're going to be wrong. And that's what I'm worried about Bitcoin. So many people are so bullish. I have to point out I'm a bit of a sissy. I just think, okay, well, great. Then I'll make money with everybody else. But that's one thing I did enjoy about oil, and still pointing out the facts of crude oil, is that price you see right now, about $70 a barrel, is very much, I think, on its way towards 40. And 40 is very much not profound. It's bottom there, 2008, 2016, 2018, and actually lower, negative. And it's been in a bear market since 2008, despite the stock bull market since 2011. I see it as this is what's happening on a global scale, is we are in the back end of the big pump in prices, which the rules of supply and demand elasticity crushes down demand, increases supply. We're just kicking in that it's just a matter of time. It has to get cheap. It always does. Cheap to me is around 40, particularly if we get a little downward trajectory in the stock market. That's all that's holding up right now. You saw it Friday. Stock market went up and crude oil bounced, but now it's going back to its trend lower. And the key thing people forget about crude oil is this is not our father's crude oil market. We use less of it every day in this country. We can create more of it. We use substitutes, ethanol. The rest of the world's got a problem, but I read a great article in the New York Times this weekend about all the rickshaws and all those exhaust spewing vehicles that people ride around in India and in a lot of less developed countries are all going electric. And you see that in New York. I saw it 5 years ago when all these delivery guys went electric. It's cheaper, it's faster, it's more cost effective. It's just both sides of crude oil are negative. And that here, I'd like to end with this, is do you really think OPEC can cut supply to their main sources of demand, the main customers, China and Europe, if there was a lot of demand? So Here's what's happening. Here's the facts: is U.S. liquid fuel and Canada liquid fuel supply over demand is in excess of 6 million barrels a day. That was a deficit of 10 million barrels in 2008. And if you add OPEC spare capacity, which is picking up every day because they're cutting supply, that's almost 12% of total production. It's just it's a classic bear market. And I'm like, say, good luck. And it's only people who are bullish crude oil, those had invested interests. This is why I'm kind of always careful about people who hold positions and make money and talk about their positions. It's just kind of one of my worried signs. So that's why I don't see what stops it. And so the key thing also misses other commodities. Copper had a good peak. Corn had a good peak. And the only one I see commodities doing well, other than orange juice, it doesn't matter, is gold. But Scott, you nailed gold. That we had a bit of a blow off top there. It's coming back around.
It's down $160 from that high last Sunday. That's a big move in gold, right?
Yeah, it is, but it's doing what it has been for 3 years,
that's
just
not the
driving all
right
the bulls
chart.
crazy. And at some point, it's going to go up. But it has. That's the thing. Fundamentally, gold has a good reason not to go up, because the stock market, U.S. stock market, only goes up and rates are high. That's got to change at some point. It will. And I thought Friday would give us a signal on that. And Friday just says no. It's going to keep being the U.S. stock market going up, and rates are going to stay high.
There's that chart for anyone who's watching. Obviously, it swept the high from the all-time high of August of 20. And then we had the more recent all-time high in May. And then, I mean, it just absolutely swept both. Huge wick up, very ugly candle, like a major reversal. That was the best part of that, obviously, was that Peter Schiff tweeted right here. Literally, like, he tweeted, it was like 2140, 3,000 tomorrow, Bitcoin's dead, gold, and like an hour later, it was back below the all-time highs, which I think, if we're going to get satisfaction out of anything as Bitcoiners, we have to have our moments to dunk on Peter Schiff.
That was the victory lap, spiking the football at the 1 yard line. Oops.
Yep. Yeah, it's funny, which is why, you have to be long-term or at least intermediate term on most of the things that you're talking about. I mean, look, when you're in technical markets and when speculators are controlling the price action, it goes both ways. I mean, I just want to push back on one thing Mike said. If this is if everyone bullish, if everyone you talk to in Bitcoin is bullish, that may be one of the most surprising things I've heard. I mean, people are happy that it's gone up, but this may be the most hated rally that we've seen in Bitcoin in period. It is nothing like the last two bull runs. Nothing. In terms of speculators. Even someone made a commentary. So I'm in Miami. We all know this last week was our Basel week. We spent the weekend. We went to a few events. We did whatever. Everyone you talk to is like, yeah, the crypto guys are just so much more restrained this year.
Yeah.
So much less euphoria, so much less partying. We were
I was there at Basel 2 years ago. And that, if you guys recall, I've told the story a million times, that was the deadest top of the market. It was like December of 2021. The crypto guys were out. The entire Art Basel was at Bored Apes and NFTs. Literally the entire thing. Like people renting out, 50,000 square foot warehouses with projected NFTs. Yeah, that was when Bitcoin dropped from 52 to 42 during a party Saturday night at Art Basel of that year.
Right. So we were there. And this year, and there was none of that. We're at the same freaking price as post Art Basel as it was then. Only the network is double the size. The all of the news stories line up, and yet people are still like, I don't know about this. And it really is much more dead. I actually think, funny enough, as I've been watching the CoinRoute screens, right now is the first time I've seen this in a long time. The perpetual swaps trading at a $40 premium to the spot levels, $30 to $40, both on the dollar inverse perpetuals and the tether and the tether based Bitcoin swaps. You're actually seeing, this is literally the first time. It's basically, is this bouncing whatever, but it's the first time we're seeing any premium since the rally up past 40 all the way to 44. Right. So, but for all last week, we didn't see that at 44,000, 43 something. We didn't see it. So It is interesting. Speculators are buying, and it looks like spot is yet to catch up right now. People are still shell shocked. We'll wait. You wait a day or two, but it's not big. I mean, it's small numbers. The funding rates haven't caught up to it yet. But it is interesting that this is the first time we've actually seen it.
It's a great point, by the way, that effectively 44,000 is where we were 2 years ago at that event, and now, and the difference. But as we leave, I'll tell you the exact reason, and that's because their altcoins are down 90%, and all of those guys were, from what I saw, the NFT guys, the Ethereum guys, the Solana guys, everybody. It was all the people with the small projects who had printed billions of their own tokens. Not to say that they did it intentionally, but they're all still way down. That's just the fact, and I think that's the reason, because the waste was washed out of the market and still is largely gone. All right, guys, it's 10:01. That's all we got. Everybody, please follow Mike, James, Dave Weisberger down in the comments. Please follow them on X, because that's where we get all the alpha. Guys, I appreciate it. I'm sorry that I had to even grace you with Elizabeth's presence there for 12 seconds. I know it can ruin your entire week, but it is what it is. We gotta share it with everybody. That's all we got, guys. I'll see you on Twitter Spaces and back here again. Oh, I've got Mark Yusko tomorrow at 9, so that should be fun. See you guys then. Thank you, everyone. Bye, guys.
See you.
Bye-bye.